From Hong Kong, this is Mea Culpa, the Lessons Learned from Startups podcast. Based on the Postmortem Conference, where founders, investors, lawyers, and mentors share their stories about working on, with, or for startups. I'm Jeffrey Brewer, and today we talk to Ben Chien, Managing Director Greater China of the Anymind Group. He came to that position as the founder of Aqua Media that got acquired by Anymind Group. He is also the co-founder of Sea Doctors, a doctor review and classified website and mobile app. Welcome, Ben.
Thank you for having me, Jeffrey.
So, Ben, can you tell me, how did you end up in startups?
Well, I think it will have to go all the way back to my starting. I was born in Hong Kong in the 70s, and I went to the States during my teen times. So I had a cross-learning between the two cultures. My dad is also an entrepreneur. He was in the real estate development and shipping business. So not exactly the ed tech that I was exposed to, but nevertheless taught me a lot in my earlier years about how to be an entrepreneur and what it takes to be one. So all my life, I wanted to follow the footsteps as being an entrepreneur, but I started kind of late, in nearly 40 years old, when I started Aqua Media.
Why did you start Aqua Media, and what did you do before that? You were working as a salaryman, and what did you decide to basically stop that and start Aqua Media?
So yes, I was working for someone all the time before I was near 40 years old. There's a lot of things that I learned that I believe it took me a lot longer than a lot of other entrepreneurs to become comfortable in starting and managing my own company. Around 2013, that's when I started Aqua Media. At that time, there was an opportunity coming from a fairly large platform that was looking for partners in Hong Kong. So it took me a while to think about this, but even at that time, I wasn't fully comfortable. Mainly because, not really because I wasn't prepared as a manager, but mainly because I wasn't that familiar with the business that was being asked or the partnership that was being looked at. So it took me a while to get there, but I was ready. I knew I was ready, and I also know that I will never be fully ready in order to face these type of challenges. So that was something that there was a fire inside me that really woke up, really. And so I took the challenge, gathered a team, raised a little bit money, and also leverage saving. I guess when you're older, you also have more savings, so that really helped. So that's how I really got started. It's from catching that opportunity and taking it on.
Okay, so you raised a little bit of money, where did you raise that? Did you make a business plan, go to investors, or did you ask some family and friends, or?
Right, it was not really a VC kind of thing. I raised my money from my parents, so that was easier, but it wasn't that big of a sum either. It was more for sort of a security. So at that time, because my kids, I have two boys at that time, so there's quite a lot of expenses. So in order to get a business going, I need to give full confidence to my family that we can last a while. So in order to do that, I have to raise some money from my family. So that's really where it came out from. But as for the business, it was pretty self-sustained profit-wise. So the profit is enough to drive the daily operation and let it grow at that time. So we were an agency, not so much of a real VC-backed startup.
Okay, so what I get from it, and correct me if I'm wrong, is basically you had two runways. One runway was the business runway, and one runway was the family runway. How much runway for the family did you calculate based upon your previous spendings?
I believe that was 9 months minimum. They have to be minimum 9 months. And that 9 months have to be pretty comfortable, like no changes 9 months. But if it were to cut back a little bit here and there, probably a little bit over a year. Yeah. But for business-wise, we can probably last quite a while at that time because we're not really backed by VC. We don't really have a growth target at that time, even though, of course, I have my own growth target in mind. If we were to project that out, including the expansion, adding the people, probably a year, approximately.
So that also means that you had your significant other on board. How was she in the whole process of you becoming an entrepreneur, being responsible for your own income? What was her mindset in that?
So at that time, it was a pretty classic combination where I was starting a company and she was in a big corporation making decent money. So at that time, we're not that afraid to risk certain things. But still, when we do the math, we only have about 1 year of money left to run the family. And so it was, there was a strict target, so which is a promise that I made, which is pretty much as important as the promise you made to VCs. Probably even more so because you can stop working with the VC, but the wife is a little bit different. So that was actually a lot of pressure on my side. And I guess the main difference is you don't see your investors every day, but you do see your family every day, every night. And you also talk about it every day. So it's almost like having a quarterly or monthly review on a nightly basis. So that definitely adds on to the pressure. So definitely, if someone's not comfortable talking to the family about these on a regular basis, probably this is something to be well aware of before going in.
How did you do that? Like you just sat down with your wife and then at that point made a spreadsheet and saying okay, these are going to be the expenses for the next year, etc., etc. And maybe at that point also, basically giving every family member a budget, or how did you get by making that?
Yeah, literally. It's almost like presenting a business plan, a financial P&L forecast to an investor. It's very similar. And it's even more personal because then you have to think about cutting all the expenses for your own interest, your own expense, all that stuff. That automatically goes out the door for at least a year. And then the parts that gets really sensitive is whether you can cut the family budget in a certain way, whether family is willing to sacrifice for this. I mean, the kids have no say, of course, they're so young, but the wife. So it's a trade-off, whether, cutting back some of the luxury at the meantime is worth it for the long term.
Okay. Can you tell a little bit what kind of experience that you had in the business before you started Aquamedia and what Aquamedia actually did?
Yeah, so Aquamedia is a publisher trading desk. And the main service that we provide is on ad monetization for websites and for app developers. So in other words, we generate ad revenue for websites and apps. That's our main thing. We provide this as a service, and our revenue comes from our service fees. So with that in mind, you can kind of imagine that who normally would have done something like that in the past. It sounds so niche. It just sounds very specific to a very small, groups of people. It is, and it's very B2B at that point. The main experience I had before that was working in another local agency, reselling for Yahoo Search Marketing. So that was a great experience. At that time, I was head of marketing. I helped out a team of approximately 70 salespeople to sell Yahoo stuff obviously on behalf of Yahoo, and so we're a reseller. So that's the reseller knowledge that I learned that was crucial for growing Aquamedia.
Okay, so at that point you started Aquamedia. How did you start? From your bedroom, or you hired an office, or how? And you started hiring people, or how did that first week? How did that start?
Yes, the first week I started off on my dinner table, and the same dinner table and same chair that I was sitting last night, and that was about 7 years ago. So yes, the whole idea, all the conversation all started by the same area, and So I was working from home for about a month before I moved over to Cocoon, which is a co-working space at that time, probably one of the few. And so that's how we started physically at that time.
Did you already like started out right off the bat hiring staff, or like it was just first you, and then when some revenue were coming in, you started hiring, or how did that work?
Right. So I was lucky enough at that time that I met someone from a previous job that immediately just came to mind. So I called them up, see if they're interested, and we came up with a way to work together with the least amount of sort of salary. We came up with a partnership, ownership, and so typical things for your first partner, co-founder, hire, whatever you call that. So ownership is very important. We can talk about that later. So we started off, and every single person, even in the 7 years of operation, were people that I used to work with in the past for at least 2 years. So I know all of them well, in their exact capacity. So there's almost no interview needed. I literally go out there and beg for them to work with me on these cases. Yeah. So at the beginning, looking for people was it was a little bit difficult because I kind of restricted myself to only work with people that I've worked with before. So it wasn't really all that many. But the easy part is I never really have to hire or to post the ad and do a lot of interviews, that kind of stuff. So that part was easy.
Okay. And then the first week, how did you get your first contact, your first client, the first revenue in? Like, how was the first month basically? Were you able, as of the first month, already make payroll, or did you have to like dig into your own investment, your own savings first to make that work?
Yes, it took us approximately, I think, 7 to 8 months to become sort of profitable. Profitable meaning that first, I don't pay myself a salary, and our only expense is the co-working space and the salary that I have to give to our first the staff or partner or yes. So the first person that takes a salary. So it took us about 8 months to get there. Initially, the first client or first 5 clients are all companies that I had worked with in the past in different capacity. So in the past, I worked with advertisers, but in Equimedia, we work with publishers. So we're lucky enough that this space, it's pretty overlapped. A lot of advertisers are also publishers, so it's pretty easy for me to just dig through the old contacts and find the same people, and without sort of affecting any of the previous relationships that I have with other companies.
And then you're 8 months in, you're getting profitable. What's next? Big cars, nice houses, Rolex, what?
Right. I do like all of the above, but no. So pretty much I only bought my first watch after I sold the company. So, and house, we were on a mortgage at that time. No difference at that. And car, no, I bought a pretty cheap Japanese car in 2007. I'm still driving the same car even today. So yes, I love cars, but I also love vintage cars. So that happened to be a vintage now. So anyway, so let's get back to that. Once we start becoming profitable, it's time to grow as quick as possible. And it was through some opportunity that we finally found, well, actually, at the beginning, when we started this company, as I mentioned earlier, the platform that was looking for partnership is Google. So we started becoming a Google partner. And over the years, the partnership grew very well. The trust is there, the collaboration, just a lot of synergy between what Google is building and what we can help them to grow the Hong Kong and Taiwan market faster. So that accelerated very quickly, and we found ways to do these, go-to-market strategy and things. And we're accelerating approximately 70% every quarter for approximately 2 years. So that really nails it in terms of growing and penetrating the Hong Kong market first. And we pretty much grew the brand within that 2 years into the go-to place for anyone that want to monetize their online digital inventory.
We talked a little bit already earlier about staff. What was the most challenging part for you to hire capable staff?
Well, I believe hiring that part isn't too difficult because I only hire people that I've worked with for at least 2 years. So I already know that I need them. It's whether I can convince them to work hard and to be passionate and to be committed. So the hardest part is to make them more committed than they started and to continue that for a long period of time. So we started, so it was right at the beginning, I wasn't really thinking too much about stock options, but this conversation started with our first staff in about the first year time, and I started thinking about this vigorously. And so I did quite a lot of research and finally committed to a plan that I should give everyone that came to the company some stock options during appropriate time in order to increase the commitment and to retain them. And this is a typical advantage of stock options. And I need to do it a way so it's not that complex because this is not Silicon Valley. This is not Yahoo I was working before. So things have to be easier to understand, have to be more powerful. So in general, I kind of changed the stock option plan a little bit from what I've learned from previous companies and applied to my own company, and that worked out really well.
Okay. You're growing, you're hiring staff, and then all of a sudden, you have a profitable business, as I maybe call it, a lifestyle business. And then what's next?
Right. It was definitely a lifestyle business. We didn't have any VC-backed funding. We were growing fast at our own rate and wish. And around this third year time, we start seeing a significant drop in growth rate. I mean, comparing to sort of 70% per quarter, it's still a pretty fast clip, but it was obviously slower. And it was the sort of deceleration kind of continued. So that kind of make us think again about whether we were just purely lucky for the last 2 years, or were we really onto something but not anymore, or things have changed around us, and how can we, change to accommodate for such. So it took us a long time. We try to not pivot per se, but we try to add more services to everything we were providing at that time, but it didn't really work out too well, and we tried it for about a year. So between the third and fourth year, that was the most difficult time. We're still profitable, and we're still growing, but it's not very, the whole atmosphere was different, maybe because people are so used to that fast-paced growth, and once we slow down, everyone kind of just slack a little bit. And so that was definitely troubling.
And of course, then maybe you get a little bit nervous. Did you have like advisors that helped you, getting to solutions, or did you have like consultant hiring, or like what did you do?
Yes, I did went out there and looked for advisors, people that have done these before, even somewhat different stuff, but mainly in the advertising technology space. There's quite a lot of good advices, but most of these things we have tried already in some form, we believe at that time. And some new things we also try, but not exactly the way that we wanted to work. But at the end, I believe the best advisors that we found that actually fixed things were actually the teammates. I guess it's from sort of not the desperation, but from the commitment. When your team see how committed the leader want to change things, everyone want to become part of that as well. So this influenced everyone, and everyone were going out there and also looking for advices in every single thing they do. Every time you see a client, they would try to add some advice, and these things really accumulate and adds up. And sooner or later, we're getting advices from the team left and right, and that really helped to infuse a lot more enthusiasm and new ideas into the business that eventually sort of turned things around.
So basically what they were doing very well, like customer discovery, see what the pain points were for the existing clients, Did you train them on that, or did they come that by themselves, or how did that evolve?
I wouldn't say I trained them, but I definitely show them by my own action. So uh, yeah, there's quite a lot of discovery, like you said. I guess in the past, when they meet with clients, they just want to sell, pitch, and get the revenue ASAP and try to retain that revenue, but wasn't really thinking very deep into what does that help ourselves in the long term, not just the short term revenue, but uh, if we see a recurring challenge from a lot of our clients, then maybe we can build something different, or we can charge differently, or we can work differently in order to solve these kind of bigger problems. And we can probably scale these globally as well. So these are sort of the areas that from my own action kind of influenced everybody else, and everyone's pretty much doing the same. And when eight people are doing the same thing, then it's a lot more powerful than just one person.
And then AnyMind came along. How did that happen? Somebody just called you out of the blue, like saying like, "Hey, we want to buy you," or like, what was the process there?
Yes, that was the fifth year, the end of the fifth year of the operation, and we were at a annual Google event where a lot of the Google partners will congregate, and we're having breakfast. So I was sitting way in front because I was a little bit late, and then even later was AnyMind's founder that came in even after me, and so he had nowhere to sit but just right next to me, and that's where it all started. We just started having a breakfast conversation, and yeah, one thing lead to another. But I guess the main thing is we're both kind of prepared going into these meetings to take opportunities um, like straight up. And you have to be pretty prepared physically, financially, psychologically, just everything in order to captivate these kind of opportunities. I fully believe that just from the first eyesight, well, when we just kind of look at each other, I immediately I remembered, oh, I saw this guy's in an online magazine somewhere. Oh, I kind of remember he started something and it raised some money, but I can't exactly remember which company or what he does. And I believe he saw something similar, maybe from some industrial EDMs or something in the past that we have sent out. They have my face in it. So we kind of both recognize each other, but neither of us can remember exactly what the other person does. But immediately once we start talking, then everyone remembers because we have all done our research before these events. So that's how I guess it started. It's not as just coincidental. I believe it's kind of planned out.
Okay. Were you mentally, physically, like ready to be acquired, like, and technically ready to be acquired, or like how did that go?
Mentally, yes, because I've actually promised the entire team, even in our first year, that we're probably going to sell the company within 5 years. I've specifically mentioned this, and someone actually brought this back up once we finished M&A. So this was something that mentally I was definitely prepared. But physically, meaning financially or operational wise, no, we're not even close to being prepared. We did not have an accountant, a lawyer, or anyone along that line for any kind of DD. So that was, as you can imagine, a big challenge when it really comes to the DD. So no, not financially or operational challenge, but mentally, yes.
So, how long did it take from that breakfast dinner with the at that event until like you made a decision? Okay, we are going to do this. Let's push this through. And how long did it take from that decision? Let's do this, and the actual rounding up of the acquisition.
It took about a month for both sides to sort of verbally express very high interest of the M&A, but it actually took us 9 months to close the deal. And it, I guess, mainly attribute to we were not as ready operational wise as we should be. Normally, these things should take maybe 3 months or something for a company our size and in our industry. but we took a lot longer. So this is definitely advice for anyone that even mentally is ready to sell should definitely get the stuff together, because you never know what's going to happen within a DD. If you're too slow, things could change, valuation could change, a lot of things could change. That could make things very complex and lead to uncertainty, and that is not good at all for any M&A.
So at that point, you made a decision. You're going to do this. Did that have any, like in those like 9 months, right? You said, did it have a significant influence on the operations and the profitability of the company while like working on this acquisition? While normally you would have maybe focused on acquiring new customers or serving your existing customers better. Or how did you see any like influence there?
Yes, it took probably 90% of my time during that 9 months to take care of the due diligence for the M&A. But for everybody else, it probably took them 10 or even less percent of their time, mainly because I was mainly doing all of the job in that part. In normal practice, I guess it wouldn't happen this way, but the problem kind of compounded. Not only do we not have any accountant, legal, and operational staff that way, all the information are mainly either in my own Google Drive or C Drive. So a lot of these things could have been a lot easier, but were made very difficult in such a time squeeze. And when more and more questions start surfacing in the DD, for anyone who have done this before, you answer one question and then 9 more came in based on that single answer. So this definitely impacted my own time, but not so much on everybody else's time. And since the company was pretty mature operational wise at that point, it didn't really affect the entire company's ability to grow. So it didn't really affect the company's growth, but it did impact the strategic thinking time that I have. That normally I just put in time to do research on a daily basis to find new areas to grow. I didn't really have much time doing that. And I guess the most importantly is the sort of the morale change. Morale change sounds like a negative thing. I mean, it's not really a negative thing. It's just quite a lot of uncertainty because everyone know that I'm working on a DD. We're about to sell a company. Then nobody exactly know what the terms in the term sheet and everything. What's going to happen to them? Are we going to change people or keep the people or like change the salary or change the title, change anything? So that was a part that in hindsight, I should have done a lot more to care more about the worries and just doubts and everything and do a lot more communication. So that's big advice for anyone who's going through this.
Yeah, and then in a pre-talk that we had, one of the challenging things you also said was that your employees had stock in your company, right?
Correct.
How did that work out with an acquisition? You're not the only shareholder at that point. So like, what was their reaction? Were there people that didn't want to sell, or like how did that work?
Right. So everyone in the company have stock options. So there's no exception. So when they sell, all the stock options have been fully vested. So that means everyone is the stockholder of the company. So when we sell, there's definitely a lot of questions that come in. What if anyone want to sell the shares beforehand, or can we have any negotiation? Can we have more stocks before we sell, or any of the things? These are valid questions, all valid questions. And at that point, it was a squeeze between the buyer and the other stock owners or the partners of the company. So once the DD started, most of the things cannot be changed from the initial stage or the stage when we started doing the DD, and that is pretty much given. And so it was quite tough to go through that stage. So a lot of conversation happened at that time to ease everyone's worry. Since we cannot change much of the stock structure at that point, we have to find other ways to accommodate for people's needs. At the beginning, I wasn't very sensitive to this, but thank God I learned very, very quickly from a few very sensitive conversations, and I've made some changes internally among us to make this happen more fluidly, so people would not leave right after the M&A, and they would stay and work just as hard, if not harder, And this is the only thing. I mean, this is very, very important for me right in the middle to make sure that it works out well for both the team and the soon-to-be buyers.
Okay. You expressed a point indeed, like people leaving maybe directly afterwards or not. That also includes yourself. You obviously made a decision, or at least maybe you didn't have that choice, but to stay on and become the managing director of Asia for AnyMind. How were you able to get this with your staff, and like what kind of terms and conditions did you negotiate with your staff to do this, and what kind of terms and conditions, if you're free to talk about it, for yourself? Because quite often, especially in the startup community, when people sell their company, most of them want out at that point also. So can you tell a little bit more about that?
Sure. It's a lot of communication one to one on a very personal level. I have to really understand everyone's family situations, what they're looking for. Are they kids like going to study abroad, or do they have any parents getting old? I mean, I really have to understand a lot of these things, almost like a full due diligence to every single partner before we do this. So once I fully understand all these, and then because the way that you talk about these things, everyone will open up more to you, and then this really, really helps. So there's no surprise later on. This type of communication help to understand what type of things we need to keep or to change. So one recurring theme is no one really want any kind of change after an M&A. Most people don't like changes. Especially people in a pretty steady job, and in that time we've been pretty steady for 5 years, so nobody wanted any changes. And obviously, if the compensation in some way, in structure or anything, can be improved in any form or even a better title, that will also help wherever it's possible. So that's something also help to negotiate. So there's a lot of negotiation left and right, and even the act of negotiating would already show the sort of that you care, and that actually helped a long way. It's not so much about the result of negotiation. So people see that they can trust you, they can count on you at this time, and then they will trust you for a long time after M&A. So if they can't even trust you during that M&A, they would probably just leave, and they cannot imagine working for you in a completely different environment for another 2 or 5 years. So that part. So it was tough, but if you put in the time to understand everyone's needs, if you make opportunity for everyone to talk, you can learn a lot. And in most DD cases or M&A cases, it's not as straight cut. A lot of things can be negotiated if you can voice out early enough, and if you really make the other side understand why you are requesting for something, and that it will benefit both parties down the road in a long-term basis, then a lot of negotiation will probably work out. So I learned it the hard way because I didn't really have sort of the guts to negotiate too early, because we're still in the DD process. So that's probably not a good time to ask for too many things, because I was really driving for a big exit at that time. So that's something that every owner, when they're selling, would have to face.
And then at that point, the whole sales process is going on. Like, did you have like advisors for that, or like did you had people helping you with the acquisition? Because I guess like the first time you were doing this, so experience there could come in handy. So how did you get advice? Where did you find it, and what type of advice was that?
So initially, I was looking for an advisor to help with the exit in order to sort of maximize the Equimedia's benefit on behalf of us. So that I wasn't really sure there's anyone that specialized in such. There were, but after I talked to a few, I don't really think I can trust a lot of them. And also I talked to other people who have exited. They also have tried such, but none of them have actually act on that route. So I did find that a great legal advisor helps tremendously in not just giving you the confidence to go through the M&A and all the documents you have to go through, and all the interviews and all the groups of professionals that you have to go through from the buyer. But it also give you, you also learn a lot more about what's sort of the bottom line, the worst case scenario, and all that stuff. And that is extremely important. I mean, in most cases, the best case scenario isn't really that far from what you can imagine. There's only so much money or things people can give you. But on the flip side, the worst case scenario can be very bad if you mess up any of the things or you overlook any of the terms and things like that. You can potentially lose your entire startup. You can lose money, like net loss, or it can be very, very different from whatever you expect to sell at and all that stuff. So legal advisor was probably the best part of the advisors that I got.
So, but legal is one side. Sorry for all the lawyers out there, but like normally my experience is that not most of the lawyers are very well educated in finance or even in businesses in that sense. How did you go along with, for instance, like valuing your company? Like, because I can imagine that, of course, a legal advisor could give you good legal advice in contracts, but probably not the best advice in how to value your company, even if it's just like one of my advisors quite often say there are only 3 rules of money. More is always better than less. Now is always better than later. And in my pocket is always better than in yours. So I've never heard a lawyer say that. So like in the business sense, where did you get your advice on valuation, business, etc.?
Wow, I don't even know how to start. I mean, the first day when I thought about valuation, during that breakfast time or during that dinner time, we already start talking, not on valuation, but definitely testing each other for the intention. That was the time that I really started think deep about the valuation. So I almost never really thought about it, even though I call myself mentally kind of prepared, but I haven't even set my valuation straight. Like if I have to say something, I don't know what to say. But if I were to think, I probably have a range. At that time, I was looking at all the other cases that have sold around this similar time in edtech or in similar industries to get an idea of the multiple per se. But different companies are a different sort of a profit margin level, growth rate, and those are the things you can never really know in order to validate your valuation. So then you start to triangulate from many areas because bottom up doesn't really make sense. Then what about top down? What about just is there a magic number that you feel that you by yourself without an MA would never achieve in your lifetime or in the time that you want to continue to work? For me, it was easier to start from that route because I'm older. I don't think I can work forever at this pace, at this stress level. And if I have to grow, I have to grow outside of the Greater China region. Am I really ready to do that? Am I suited? Is my family supportive? And all that stuff. I kind of know the answer to all that. So I kind of, if I were to put a limitation on that, what's the valuation of the company or what's the sort of revenue growth or the profit growth of the company in the next 5 years, if those are the limitations. So I kind of did that math on just the back of the envelope. And then I put in an industry average multiple, and that's kind of how I came up with my valuation. So basically, tie to your own limitations and use some industry average multiple. That should be the best way at that time. So that's how I did mine. But of course, that didn't. In some cases, when you look at it in different ways, it could be drastically different. It could be 1-0 different. But I guess at the end of the day, it's really about how much money will you and all your partners be sort of satisfied in a way. And that's much easier to come about. So it's not much math. It's really just a feeling.
So, and then you sold it. Now you're basically salary man again. How does that feel?
It definitely feels good, not because of just a salary man that per se. I mean, to me, salary man or being your own boss, it's not too much different in terms of the enthusiasm when you go to work. It feels exactly the same. It's what you do, is your reputation on the line, and is because I have nothing else better to do. So I feel the exact same way. Just both are just as respectable as the other. But I guess now is it took a while to get used to, but not as long as I imagined. I would imagine it will be very difficult for me to get back to just having one boss. But it's actually a lot easier, maybe because the startup time for me only lasted 5 years, and I worked for about 20 some years before that. So I'm pretty used to having one boss, and that feeling comes back pretty naturally. And then the best thing that really comes to this is the ability to learn something completely new that I would never be able to learn it myself. At least I wouldn't have the intention to learn it. And that's social media, influencer marketing, and other platforms the company is actually building right now. And also the ability to reach so many other countries. So we're currently in 13 countries, and I was when in Ecomedia time we're only working 5 countries. So it was significantly a lot more diversified, culture-wise, language-wise, every way possible. So in between the culture diversity and also the product or the solution diversity or the addressable market, in that sense, is just so much more than what we had before. And that's what makes this interesting to me.
Thank you for that. What is an often given advice that you hear going around that you actually don't agree with?
Okay, the biggest one would be I was pretty often being criticized as changing my mind too often, hopping from idea to idea, and mainly that those feedback come from my teammates, not so much from clients that I got. But it's something that sometimes bothers me to think, okay, is it really bad? But in the back of my head, I know why I'm doing this. I'm doing this mainly in a way of, it's almost like agile testing in a way, that I like to not think things through too much, but quickly take just a small step, try it out. And if it doesn't work, why not? And just improve on it and just keep improving on it. And so if I keep doing that, I have to have someone to help me to do that. So and that will turn into just sort of, what do you call it? I just ask my team to help me to execute on some of these things. So in a way of execution, from anyone that does not really think the same way or understand the full thinking or the train of thoughts, it will sound like I'm just changing my mind all the time. And sometimes it's even 180 degree around from certain perspective. But maybe because I realized something did not work, so I have to change it around or I have to do it some other different way, but I didn't explain too well. So that is something I believe is kind of my style. And that it's good for industries that are relatively new, that does not really have a Bible to follow. And if the founder or all the team members are able to cope with this, that will also make perfect sense as well.
Right. And what was the most valuable advice that is ever given to you, or like life lessons that somebody taught you?
Yeah, but have the contrarian thinking. So when I started Equa in 2013, before I started, I actually went out there and talked to 3 large agencies whether they want to do this, because a Google friend asked me if anyone in Hong Kong want to do that. I looked around, everyone thought I was crazy, and why would I even bring this up to them? Because I was in the same shoes in the past. And so they thought I was crazy. They just thought I have bad vision and things. So I didn't really take it offensively, but I actually took it as, okay, maybe nobody believe in it. There will be zero competition. So if this somehow, some way worked out, then I'll be God. So this is sort of the thinking that reinforced my thinking of you got to think differently from other people. But of course, not just for the sake of that, but to think about ways why people don't think it will work, and take sort of a lesson from that and kind of pivot it in certain ways that will work, focus in small areas, prove it, and then work things out. And you do this enough, and if you think about these sort of contrarian thinking ideas often enough, you will find some areas that you can actually disrupt things.
Okay. What's something that's not a secret, but most people don't know about you? Like you already talked about vintage cars. We could probably at that point fill an whole episode on that because I have my opinions there too. For me, that would be the BMW E38 750i from 2001 all the way.
Oh.
But what's something that most people don't know about you?
I believe most people, or not, but many people that I've talked to thought I was from Beijing specifically. I was originally from Hong Kong. I've never spent any real time or even working in Beijing, but I understand why they think that, because my parents have been working in Beijing since the 80s. So I traveled between Beijing and Hong Kong very frequently, on sometimes a couple times a quarter. So, and when people call me and say I was Beijing, so everyone thought that was my home. And I even call that my home because I guess in Chinese, when you call home, it's not really where you were born, it's really where your parents are born, or your parents are born, or sort of originated city or village. And so I kind of just people thought that. I guess I'm fine with that, of course, because my parents live there and I love that place, even though I can't really visit it now, not as often. But I guess the main lesson learned is, I guess it's what you consistently do that sets your brand, not so much of what you tell people or what happened in a snapshot of time, but it's what you keep doing over and over and over that really sets as what people sees you. So that's a pretty interesting realization.
And if there's one thing that you want people to take away from this talk, what is it?
Since we're talking about startups here, so I would think after all the M&A and the way that I started a company and it ended fairly well, I would think that, I mean, even though I'm really into the VC ecosystem, I love how it works, I'm very intrigued by it, I still think that there are quite a lot of startups that if they have other ways to capitalize, to raise money, the VC route might not be the best route if they think hard. So don't just automatically assume that you need to raise from angel to seed to series A, B, and all that stuff. There are many other ways in between finding a bank to get a loan all the way to a VC. The different type of VC as well. There's the type that don't really require that high of a growth rate, but of course they would require something else. But the whole combination of sort of the ways to work with different people that provide the capital to you, every founder should explore more, should research more, to really research in their own soul in a way, to really find what do they really look for, what's their time horizon, what can they tolerate and what can they not tolerate, and all that stuff, and really truly understand from their peer or people that have go through these kind of growth states to fully understand what is required mentally, physically, financially, all that stuff. So there are many ways to do things. And being a startup, everyone should know that. So I guess one advice would be when you raise, or when you even think about whether you need to raise money, think very deep and put more time into this. And there's always a way out. So if you kind of mess it up, don't think that, oh, I messed it up first, I have to go through the second and all that. There's always way out. So don't go deeper and deeper into a space which is not suitable. So here I'm not saying that VC is not good, definitely not, because I myself eventually also want to be one. But I might think a little bit differently from the traditional VC that's in the Valley and so forth. And I also see there's a lot of new breed that's coming out recently in these couple of years. And so those are sort of a direction that I think will be very attractive for different groups of founders.
Okay, thank you very much. I want to thank you for your valuable insights and sharing of your lessons learned in startups.
Thank you very much, Jeffrey.
I also want to thank Kowloon E-Stadium for supplying this recording studio while we're here in this COVID-19 situation here in Hong Kong. You might hear some background noise, but we're in a padded studio, so they were able to sponsor this room for us. So thank you very much, Kowloon E-Stadium in the IMAX Mall. For the listeners, although the rating system of the podcast is hideous, if you like this Mea Culpa series, you can rate this podcast with the 5 stars and motivation for the makers. This is Jeffrey Brewer. Normally I would say go out and build something meaningful, but don't go out yet and just build something meaningful. Thank you very much.